This is the Friday, June 21st, 2013 version of the Market Plus segment. Joining us now is Mark Gold. Mark, welcome back.
Thanks, Mike. Nice to be back.
Well, glad to have you. We've got a simple question to start this session off. James in Kremlin, Oklahoma is asking, should people hold or sell wheat off the combine?
Well, I don't see a whole lot of carry in the market, which tells me that there's no real economic incentive to store wheat. The question really is, does wheat have an upside potential here? And particularly in hard wheat, I think it does. So I would be selling the wheat off the combine. I'm not a big fan of storage. Guys, if there's a basis reason, a basis play there, maybe I could see storing that wheat. But in all intents and purposes, I'd be selling the wheat and buying a call option. Don't sell the wheat if you're not willing to buy the call option. Spend 20 cents and get long something. And don't try to get cute with it. Don't sell a put to try to pay for the call. Just go out and spend the money for the call and try to keep the upside open. Because if the yields are as bad as we're hearing in some spots of Kansas, there's some hope in the hard wheat. If you're selling soft wheat in the eastern part of the country, I'd still re-own it with a call option. But again, I would use the Kansas City call, the hard wheat call, because I think that's got a much better chance of moving higher faster than the soft wheat does.
All right, good advice. Now we've got a question. Jeremy in Oneida, South Dakota is asking, what does it take to make Mark Gold bullish? What are you bullish on, and what informs sort of the bearish sentiment you seem to have from time to time?
Well, I guess I've got the reputation of being, the big bear, that prices are always going down. And I've been that way probably, for several years. And it's real easy to define what makes me bearish and what makes me bullish. When we're in the upper third of historical prices, it's not that I'm bearish. I'm considering that we've got a lot more risk to the downside than to the upside. So in the cases where we're in the upper third of historical prices, whether we're in cattle, whether we're in grains, I'm looking to buy a put option to protect that risk that's in the downside. When we get in the lower third of historical prices, now I'm getting bullish. If we're selling grain, if there's no carry in the market and we're selling grain, that's when I want to buy a call option. And I have a reasonable expectation that that call option can pay off. So in my own mind, I don't consider myself a bull or a bear. I consider myself a risk manager. I'll let all the gurus try to figure out which way this market's going. What I try to do is to manage the risk. And when we're in the upper third of historical prices, I want to manage that risk with a put option, with some cash sales to protect all of that risk to the downside. I've been in this business now, it was 40 years this last week. I've seen a lot of markets. I've seen the ups and downs since the early 70s in these markets. And in my opinion, every market generally has a tendency to go back to where it started from. So when we get these kind of spikes in a market, $15, $18 beans, do we have a legitimate chance to go back to $8 beans? We saw that in 2008. We got to $15, $16 beans, right back to $8 within 4 months. We went to $8 corn, back to $2.90 corn. These are the things that I remember, and I want to protect my clients. So, yeah, prices can move higher, but when we do get those highs, it's not that I'm bearish, it's just I want to protect the risk. So I think there's a difference between being the perennial bear and being a risk manager. And when prices are high, I want to protect the downside. When prices are low and we're making cash sales, we're buying call options. So I think that's what defines me.
All right. Well, I hope that clears it up for Jeremy. Now, as we take a look, a lot of folks are curious about what to expect from next week's USDA report. A couple of the questions: is it going to matter? Is the market going to trade the numbers that come off the USDA? Second question: what is your anticipation of how the USDA is going to be reporting these numbers, or what is the market trading currently?
Well, the market will trade the USDA numbers. The Informa numbers and the average guesses that people put out, they're an indicator, but it is the USDA number that we will trade, and that's the number that will be used as the benchmark. So yes, it makes a big difference. I believe we probably lost 2 million acres of corn out here. I believe we'll pick about 1 million acres up in beans, which is pretty much what Informa says. I agree with that. I think those are realistic numbers. Ultimately, I believe we could pick up a few corn acres that people don't think we're going to pick up, but I don't know that that's really going to be the real driver of these markets. From here on in, it's a weather game. If we have the rains in July for the corn, if we have the rains in August for the beans, we're looking at huge crops a lot of competition around the world, a strong dollar, and China's demand backing off, which, let's face it, China has been the demand driver in these grain markets, basically, period. And if we see them backing off and we have bigger crops, then we're going to lower prices. If we come into July and we turn 95 to 100 degrees, if we shut off the rain, then you've got a corn market. Now, in my opinion, these weather gurus can't predict the next 2 or 3 days. But the government came out with the July forecast. The Southwest looks hot and dry. The rest of the country is in the normal range. Normal rainfall, normal temps. If we have an 85-degree July with scattered rains, I can't even begin to guess how high these yields can go. But I believe, despite all the talk about the late planting corn, that we can pump up some pretty large yields out here.
All right, and with that being the case, how low do you see prices going? Are we going to be looking back at the $8 beans again and the $3 corn if we get the rain?
If we get the rain, I believe, $3.50 is certainly realistic. I believe $10 is certainly realistic in the beans. That's $2.50 in the beans. That's a buck more than almost $2 in the corn. I believe there's significant risk out there.
All right. Now, if we see those kind of prices, that sort of plays into Jason's question. Jason in Nebraska is a cattleman. He's frustrated. We finally are seeing a little bit of an upswing today. If we get those lower prices, obviously that's going to be helpful. But he's asking, is there any hope in sight? What can we anticipate short-term, medium-term in these cattle markets?
Well, in the cattle market, here's a market I'm relatively friendly. We've got high prices out here historically, but we've had a nice break off of these highs. We've seen the market try to come back. We closed over the trend lines in both the feeder cattle and the fat cattle. Impressive. Hog prices are high, so that's going to help the cattle market ultimately. If pork continues to move higher, that's not going to hurt the cattle market. Again, a lot of the pork demand is going to be off of China. They've got certainly problems with the rice market and some of the incidents they've had, which is going to hurt the rice demand, which tells me that they've got to either eat chicken or pork. So we can see that market stay firm. We just need a little bit better demand. We've seen wholesale beef go from $2.10 record highs. We did break it here, the better part of $10, but I still believe we got pretty good demand out here for the cattle. And as we get maybe a little bit more summer weather, guys get out and grill a little more, I think we're going to see the demand pick up. I like the fact that we closed over the trend lines. So I'm a little friendly on this cattle market, and I think there's some hope in there.
All right, so just keep an eye on the trend lines. Keep an eye particularly on Monday's close after today's report.
Yeah, if we can close it twice over that trend line, then I think you've got something. Because the report was a little bit bearish, if we can have a solid close on Monday, I think that would be a great indicator that we can see some higher prices yet.
All right, so we'll end on a positive note.
Absolutely.
Thank you so much, Mark. Appreciate you being here.
Thanks, Mike.
Thanks to all of you for sending in your questions via Facebook and Twitter. Please keep it up, and we'll get expert answers for you. Have a great week. Thanks for watching.